Homes going under contract dropped by 20% year over year in June. That's huge. What does that mean for the rest of the market? That and more coming up in this month's edition of Atlanta's Housing Market Update. Let's jump right into it. We're going to start with mortgage rates. And right now, rates this past week, the average rate was 6.81%, according to Mortgage News Daily for the 30-year conventional. That is really, really high. When I do this video, I tend to look at the weekly average. So we're going to look at the Freddie Mac PMMS weekly average for the 30-year conventional. And this past week, we ended at 6.58. Now, the yearly high, you go back. Gosh, I mean, you got to go back to the beginning of last year to see where we were in the sevens. This year, we've been in the sixes, right? So 6.58, take a look at that weekly trend over the past couple of weeks, certainly to start the month in July. And we've seen the interest rates trend up. That has a lot to do with the 10-year treasury, which has also been trending up. We're actually at a year plus high, call it a year and a half high, because if you go all the way back, this data starts in January of 2025. So call it a year and a half. This is the highest that the 10-year treasury's been. And if you've watched these videos, you know that the 10-year treasury has a big impact on what the 30-year conventional does. So it goes up, so does the 10-year, or so does the 30-year conventional. So we're going to see where that goes, but that is a high. I mean, it's crested 7.71 in the past, in the high 4.6s, right? 4.67 as early as this past May, but this is trending up. Expect mortgage rates to continue trending up for as long as that 10-year treasury trends up. So what could impact the 10-year treasury to start coming back down? Well, there's a couple of factors. One, right now, the market's pricing in the expectation that the Fed is going to keep the Fed fund rate the same. They're not going to reduce it because of fears of inflation. You've got rising oil prices, tensions in the Middle East. Is it solved? Is it not solved? That's the saga that continues. All of those are putting negative pressures on the 10-year treasury, which also puts negative pressure on mortgage rates, basically. Okay. So mortgage rates, that's where they are. Don't expect them to come down. Everybody was optimistic in February before the war started. They touched into the fives for the first time in a very, very long time. Now they haven't trended back there. So when we take a look in a couple of slides at where pending sales are, homes that have gone under contract in June, maybe there's a correlation there, right? It's a 20% drop year over year compared to last year in June and compared to the year before. So we'll take a look at that. So let's jump in some of these stats. Now, this here is the overall market. You're going to see, if you've watched my stat videos in the past, we were talking about the greater Atlanta area. I've switched the data set from FMLS to Georgia MLS because we have two multiple listing services in Georgia. And I wanted to more accurately show what's happening in the southern counties. And FMLS, while it is the predominant FMLS for a significant part of Atlanta, there are a lot of listings in, call it Fayette, Henry, Clayton, et cetera, those counties that don't make it to FMLS. So the data is always skewed. I was tired of seeing it. But this right here, you're taking a look at the blended market. So single family homes, pre-owned plus new construction over the past while. You can go back 2 years and we've been at that 419 to 420 mark, right? Roughly that's what our median price is for single family homes. Whereas there's a downward trend here for townhomes. Past couple of months, it's been 365, but over the past year, this has trended down. A year ago, it was 375,000 for your median price townhome. Now it's 365. Condos this time last year were at 295. They're down to 289. A little bit of a bump up month over month there, but that's still a drop. Now we're going to break this down a little bit more. And core Atlanta counties does include Henry County. So there have been requests in the past, comments on the channel, on the different videos, if asking if I could include Henry. So now it's added. Okay. So I think we're going to include Henry moving forward. So let's take a look. I want to show you the difference. We're going to put a big emphasis on single family in this video. We are going to talk about townhomes and condos nonetheless. But look at the difference here between the median price for new construction and pre-owned. So pre-owned resale existing houses, that's a $51,000 difference. But you take a look at the single family home market for existing houses, and we're kind of seeing there was a little bit of a sideways crab walk, right? when you take a look at that. But over the past couple of months, that's been trending up. So we're up to 414, and we were at 410 for quite some time there. So the median price on existing homes is going up. Meanwhile, the median price on new construction is trending down. That's what I was saying at the beginning of the video. There are a lot of new construction neighborhoods. Atlanta is a great market for new construction. We have a ton of builders building all over the place. And now they're starting to run into a situation where interest rates, I believe it's interest rates, right? And uncertainty about the market has started to slow down the new construction market. So that's why I want to bring, I've got a new video all planned that's going to focus on new construction, but there are some interesting opportunities. You're seeing more incentives than ever from builders to try and encourage people to come into their communities. And at the same time, you're starting to see some price reduction. So I get a bunch of emails saying, hey, price reduction here, price reduction there. Do you have any buyers that are looking to buy? We've got phenomenal incentives. Use our preferred lender. We'll kick in a much lower interest rate. We'll pay for your closing costs. We'll throw in appliances, all that kind of stuff. So, nonetheless, that's a gap that has existed pretty much forever. The gap narrowed for a little while during the fever pitch of the market after the health crisis, right? Between 21 and really like 22. And then after that, as interest rates started to shoot up, there was basically divergence here. So that's what we're seeing. All right, moving on. Let's take a look at the median price for pre-owned broken down by county. Forsyth County still has the highest median price. There is a year over year drop a little bit, so 611 down to 610. In Fulton County, prices are up a little bit, 480 up to 487 for the median price. Same thing in Cobb, 439 up to 441. And then there have been pullbacks in a lot of these other counties. So Cherokee's down marginally, 473 to 470. Clayton County, 240 down to 237. DeKalb up incrementally, 343 up to 345. Douglas is down 309 to 306. Take a look at Fayette, 514 down to 505. And Henry, new entrant into these monthly stats, 318 down to 314. Gwinnett's down a little bit, 409 to 407. Paulding didn't really move, and then Rockdale neither. It's neither. It's there as well at 295. Moving along, let's take a look at new listings hitting the market. So there was a little bit of a divergence in May. Take a look at that. It's 1,200 less listings came to market in the month of May this year compared to last year. But in June, it was the same thing as last year. So 9,400, 9,500 thereabouts were also outpacing 2024. So there's more inventory coming to market, more choices for buyers. That inventory is located in these locations. So we've had some pullbacks. Take a look at Fulton. There were less properties coming to market. It's about 102 less properties year over year. Gwinnett is up a little bit. Henry's up a little bit. DeKalb is up quite a bit, 779 up to 886. Cobb 924 up to 983, and a little bit of a pullback in some of these other counties. So you can take a look here. I will make these slides available. There's a link to access this on your own time after. If you want to watch, check the description. That first comment, as always, it's free to access this information. You don't even have to give me your email. Okay, so listings, new listings coming to market. There are some counties where we're seeing a pullback, other counties where there are more coming. One big county to note is Fulton. There were quite a few less coming to market in Fulton this month. If we take a look at active listings across the board, now we're starting to see more listings on the market this year than there were last year in June. And it was intertwined with last year for the past couple of months, starting to break away a little bit. So I know this video is coming out at the end of July. I'm going to try and have the next video come out a little bit earlier. Things are starting to, with the schedule, fall into place. We've added a team member, Brittany, to our team, and she's allowing us to buy back a little bit of time so that I can focus on getting some of these stats out for you as well. So this is going to be interesting to watch in a couple of weeks to see where this number went for the month of July. Now, broken down by county, you can see here again, so there are more new listings in Cobb, more active listings in Cobb. Less new listings coming to market in Fulton, less active listings on the market in Fulton as well. So it's not super weird to see, new listings coming to market in one area. Of course, there's going to be more overall active listings there as well, assuming that the pending ratio kind of stays the same as well. So we're going to look at that next. So pending listings, this is what I was talking about in the introduction. That's a 20% drop. Take a look at that. That's 4,041 across the 13 counties that make up the core Atlanta counties. And last year, we had 5,034. The year before, 5,129. That's 1,000 to 1,100 less listings in the month of June that have gone under contract compared to the two previous years. The two previous years, take a look at the black line and the gray line, and it was pretty much lockstep the whole way. So I'm really going to be interested to see what happens in a couple days when we pull these stats again. And I would encourage you to watch this video and come back in a week or two to watch the other one to see how this changed, because this is, if this continues to drop, it's just an indication that the market is moving more and more into a buyer's market with a correction. There are more people who are waiting to see what happens, right? We're also heading to a part of the year where a lot of the school crowd has already moved. And if they haven't moved, the late people who are late to the market are trying to get things done in July before school starts in August. So school-driven counties, it's normal that you see a drop in activity after the rush of the spring season. That happens every single year. But it did happen the year before and the year before that, and this is significantly less. So something to keep an eye on for this next coming month. Now, where this is broken down, look at these drops here. So Cobb last year in June had 610 listings go under contract in June. This year it was 433. That's a huge drop, right? It's almost a 25% drop there, 20 something. DeKalb, 535 down to 415. Look at this drop here. This is a huge drop in Fulton County, 678 all the way down to 467. Gwinnett, 651 down to 495. So the big four counties, the Fulton, DeKalb, Cobb, and Gwinnett, have all seen big pullbacks on the amount of properties going under contract. Now, there's not a single county on this list that saw more properties go under contract this year than last year, but places like Henry County, there were 223 last year, 212 this year. From a ratio perspective, it's a smaller drop year over year. Same thing with Rockdale, 78 to 73. Douglas, Fayette, almost the same, and Clayton. So when you look at Cherokee County, 305 to 187. So when I look at this, and again, another one here, we saw the median price of Forsyth County in the 600s, right? Well, 263 the year before, 143. Now this is pre-owned only. So the numbers are telling us when you look at this that people are still continuing to buy houses in the more affordable counties. You take a look at Rockdale, Fayette, Douglas, Clayton, Henry, they all have houses that are a lot more affordable. People are still buying in those areas. And where the median and average prices are higher in the big four, add Forsyth and Cherokee, call it the big six, that's where the biggest pullbacks have been. So yeah, I mean, that's certainly an interesting stat here. So let's take a look at closed listings. So closed properties for the month of June, well, it's pretty much in step with where we were last year. It's going to be interesting to see this next month because you have a property go under contract, it's going to close typically in 30 to 45 days from that point. So I'm expecting to see when we pull the stats this in coming month in July, a pullback in the number of closings for July comparatively last year. So last year we had 5,178. I don't know. We'll see. We'll see if it kind of drops down here. So lots of different things to look forward to in the coming weeks from a stat perspective to understand what the market is doing and more importantly, where it's going. So closed listings across the board. This is the interesting thing is there was such a big pullback for pendings in Fulton, but year over year closings are up. So 678 up to 718. DeKalb also they were up 556 up to 577. Paulding they were up incrementally as well 183 up to 196. Forsyth County 239 up to 280, and then everywhere else a little bit of a pullback, bigger pullback here in Cobb. Take a look, 699 down to 635. And in Clayton, 198 down to 155. Now we're going to take a look at the ratio to active or the ratio of active listings to closings. We're going to look at single family, townhomes, and condos. So this is a gap that continues to widen. And we have 16,283, and this is for single family, and we're taking a look at everything for this, not necessarily just single family and resale, but it's new construction as well. So 16,286. There were 4,084 closings. This here is a ratio of 3.98. So for every active listing, for every closing, there are 4 active listings. That's the way that you need to look at that ratio. And if you go back a couple of years, back in like 2021, 2022, it was almost a 1-to-1 ratio. For every active property that was a single family home, there was one going under contract. So the market was moving quite a bit. Now you're seeing a little bit of that, this gap widen here. You take a look at this gap here. This is trending up. And now this has kind of peaked. Are we going to see it come down with all the drop in pending listings, the 20% drop for single family specifically? That will drop this next month. So it's going to be interesting to see. All that says, what this means, if you're looking at this from a buyer, is you have more choices. There are less property going under contract. Sellers are not going to have a choice. They're either going to have to become a little bit more flexible with pricing and certainly understanding with where the market is, or they're going to sit on the market, and buyers are going to continue to make offers that are going to be a little bit more aggressive as well. And you're going to see probably more properties where sellers are unwilling to budge on their price. Eventually, those sellers are going to have to exit the market with a withdrawn or an expired and wait. It would be a mistake to wait for the market to improve unless you have a long time frame, because when you look at real estate cycles, they run in 7 to 11 year cycles, 7 to 12 year cycles, right? If we look at Atlanta, the bottom of our market in Atlanta was 2012. That was the bottom. Prices went up from there. And then statistically speaking, when you look at where the top of the market was, it's 2024 between June and like that second half of the year. That's the top of the market. That's not to say that there aren't cities and counties and zip codes that are still appreciating, because there are. The hottest zip codes, as we'll see, are still continuing to have positive price appreciation. But as a market as a whole, we've seen a pullback and a correction. Now, corrections tend to last 4 to 6 years. So if 2024 was the top of the market and you're looking at 4 years, then 2028 is going to be the end potentially of that adjustment in the market. But it could also be 2030, it could be 2031. It's not always an exact 4 to 6 years. It could be a little bit more, it could be a little bit less, a lot. In this case, depends on where interest rates are going, right? Certainty, concerns in the market. You want consumers to be confident about their jobs, about the income that they're making, to be able to go and buy a house and make that commitment. So when you're looking at this, I think if you're a seller who's thinking, you know what, I'm going to take my house off of the market. We're not going to play these games. I'm going to wait for interest rates to drop. We've been wanting rates to drop for the past 3 or 4 years. They haven't, right? I mean, they have a little bit. They were at 8% in October of 2023. But they've been in the sixes pretty much, going up and down in that channel between 6 and 7 for the past 2 to 3 years now. So it's unlikely that rates are going to drop into the fives this time next year, right? So it's what you need to ask yourself as a home seller is, if you need to continue on with your life, you need to sell this one house to purchase somewhere else, and you're waiting for the market to get better, you might have to wait a couple of years for that to happen. And I'm talking about an extra potentially 3 to 5 years for that to happen. You're looking at 2028, potentially to 2030, 2031. If you look at historical market cycles, that's probably what we're seeing for the market to take that next big step up, right? So if you can wait that long and you're happy with where you are, the house meets your needs, then great, take it off the market. But if you need to be gone by a certain time, then this year your house is going to be worth more than what it's going to be worth next year. And again, little asterisks on that. A lot of it depends on where your house is. If you're in Alpharetta, Roswell, East Cobb, in town, Brookhaven, parts of Buckhead, Sandy Springs, Dunwoody, those general areas are still very, very much on fire right now. So they're not going to react the way that the overall market's going to react. So food for thought, okay? So this is a gap that's getting bigger, right? Now, if we take a look at townhomes, it's the same thing. So this is a four, almost a 5-to-1 ratio, whereas single family was 4-to-1, townhome is 5-to-1, and this has been shooting up since the start of the year. Here it kind of looks like we've reached a certain number of closings that have happened over the past couple of months, 473 to 470. We'll see that drop probably this next month. So this is a gap that I also expect to widen, and we'll see when we get into months of supply and pending ratios which market we're in for townhomes. But I think you can kind of guess where that's trending. So condos are even worse. So 6.3 active listings for every closing. So this is starting to trend down here as well. A little bit of an uptick to start the year, but active inventory for condos are starting to pile up as well. So that's a bigger gap. Now, days on market, if we take a look at pre-owned, we're going to take that new construction and remove it from these equations. Condos are at 48 days. When you factor in new construction, they were a lot higher. But if you're selling a condo right now, 48 days is the median across the 13 counties, 40 days for townhomes, and under a month for single family. So it's been like that for a while. Single family continues to be the driving force. It's 85 to 90% of the market here in Metro Atlanta, and it is moving on average, well, at the median of the market at 28 days. If you're not sure what median means, it means that half of the listings take longer to sell and half of the listings take, more time, less time. I went up with that, but you know what I mean, right? So you're at the middle of the market when we talk about the median. So half more, half less. So let's take a look at days on market broken down by county. So Cobb is the fastest moving county for single family homes. Last year it was 24 days. This year it's 24 days. That hasn't moved. You take a look at Henry County is the slowest moving county for single family homes at 37 days. It's 28 days on average, right? Or the median is 28 days for the greater Atlanta area, the core Atlanta counties. And that's where Fulton is at 28. Cherokee's moving fast at 25 days. Fate's moving a little bit faster than what the median of the market is as well. And then Paulding is slower, Douglas is slower, Clayton slower as well. So it's interesting that some of the counties with the more affordable properties, where the more pending sales are happening, the more closings are happening, the properties are also taking a little bit longer to sell there. Now, moving on, we're going to take a look at months of supply. Now, condos firmly, anything above this line here is a buyer's market. Anything in the shaded area is a balanced market. Anything under that is a seller's market. In a balanced market, the seller and buyers, it's more equitable negotiating. Think if you were in the market between 2015 and 2019, that was a nice balanced market at that point. Okay. So, and then things got crazy between 2021 and 2023, where it was a gross seller's market. Sellers got everything they wanted and then more. And now you take a look at single family this past year and a half, it's still a seller's market, 3.7 months of supply as a whole. Townhomes have now trended into balance. And so that's what we were saying earlier, a couple slides ago, is look where the trends are going. Well, it's now trended into balance, and condos have firmly been in buyer's market territory for a couple of months now. You've got to go back to really August, September of last year to see that traverse into buyer's market territory, broken down by county. Taking a look at Rockdale. Now, again, single family as a whole is 3.7 months, but you take a look at the different counties and you'll have some variance there, right? So Rockdale is a balanced market. Everywhere else is still technically a seller's market, but I would argue that anything over 4 is going to feel like a balance or a buyer's market to a seller who's experienced the market over the past couple of years, where things would move. You'd put the house in the market and it would go under contract within a week or two. Now it's taking longer. A lot of people forget that it used to take months to sell houses back when the market was in the teen years, right? Kind of heading back towards that. It's more market normalization, but I think a lot of people have recency bias. And when you have friends and family members who've put their houses in the market in previous years and sold like, what, can't really snap my fingers, but sold really quickly, and you're looking at your situation going, wow, why isn't my house selling? Well, it's a bunch of different things. It usually comes down to either price, condition, or marketing. And those three factors can influence how quickly you sell, right? Price, market determines price. It's not your realtor or you that determine that. It's what the market's willing to pay for your house based on the condition of the property, which is what sellers actually have control over, and the amount of marketing that your agent is doing to get the word out about your property. So if your agent is exposing the property to as many people as possible and the condition of the property matches the market's expectation of what that should be priced at, you're getting a bunch of showings, you're getting offers, you're going under contract sooner rather than later. Here, take a look at Cobb, 2.8 months worth of supply. This is a very fast moving market for single family homes, and Gwinnett as well at 3.3 months. Cherokee's another one at 3.3 months. So strong seller markets in those three counties. And Fulton is at 4.2. So I mentioned earlier that it's going to kind of feel like a shifting market. Fulton's so big, it really depends on what side of Fulton. If you go to North Atlanta and you're looking at Alpharetta, parts of Milton, Roswell, Johns Creek, Sandy Springs, well, it's going to feel a little bit more like a seller's market, especially in the better school districts. Those months of supply will be a lot lower. You go to South Atlanta, which is also Fulton County, and those numbers are a lot higher. It's going to be more of a buyer's market. And in town, it's a mix. It depends on the neighborhood, the zip code, and so forth. So now let's take a look at pending ratio. And pending ratio is another way of finding out, it's another metric for what kind of a market we're in. Is it a buyer's market or a seller's market? 18 to 25% is considered balance. Under 18% is considered a buyer's market. Anything over 25% is considered a seller's market. So here, when we look at where we are currently, 20, almost 21% for single family homes. This, when you're looking at pending ratio, it's basically you take the number of actives and the number of pendings, and you're taking a look at pendings divided by actives. And that gives us a ratio of properties that are going under contract for the amount of active properties that are available in a given area. Okay. So it's kind of like an absorption rate when you're looking at that. So 1 out of 5 properties is going under contract for single family homes. Take a look here at townhome. That's closer to 1 out of 7 and 1 out of 9 for condos, right? So that's not great. We're going to break this down by county in just a moment, but this gives us a snapshot for what's happening in the market as a whole. And all you got to do is go back to the spring market to see that it was a big seller's market. 1 out of 3 and change single family homes were going under contract in March, to give you an example. And same thing for townhomes. For townhomes which have reached balance in the market this spring, also it's 1 out of 4, 1 out of 3.5, basically, we're going under contract in a given area. Condos was 1 out of 6, so it's gotten worse as we go into the heat of the summer. Broken down by area, we're going to see Cobb is at 24, and 24 is going to be, it's almost a seller's market. It's at the top of that 18 to 25%. DeKalb, same thing. And then here in Fayette, you are just a little bit over. So it's a little bit of a seller's market right now. It's single family homes in Fayette, comparatively speaking. We've got the shaded area here to kind of show where that is. And then in Forsyth County, I mean, that's 1 out of 6, right? So Forsyth County is actually a buyer's market when it comes to this pending ratio right now on pre-owns. Okay, list to sales ratio. So you're seeing single family homes sell at an average discount of about 2% over the original ask price. Townhomes are at roughly that 2% as well. It's 1.9 versus 2. Practically the same thing. Look at that. Like, they've been in lockstep the whole way these past year and a half, 2 years. And condos, well, the typical condo is selling at 3.2% off of the original ask price. Broken down by area, let's take a look. And the market is 98.1%. Paulding is selling for more. Douglas is selling for more. DeKalb, Cobb is selling for more at 98.3. Cherokee is selling for more. Fulton, you're getting some nice discounts on houses right now. You're getting a 3.3 or a 2.3 percent discount. And then Fayette is at 97.5. So Clayton's the one that's the lowest on here. It's 97.3. So you're getting a 2.7, almost a 3% discount on single family homes across the board in Clayton. Now, volume, This here is going to show new construction versus pre-owned. And the reason I did it this way, if you take a look at combined, this past month, there was almost $3 billion worth of volume that was done in the marketplace. Um, but new construction, there's a lot of new construction in Atlanta, but there's a lot more resale and pre-owned activity than there is new construction. And I think it's important to understand that because sometimes we think that new construction is driving everything. And there's no question that right now for buyers, new construction has been a very interesting proposition because most builders are subsidizing the interest rates with either temporary buy downs or permanent buy downs that are very attractive and closing costs and all that kind of stuff, right? But volume has been fairly consistent for new construction. You've had some ebb and flow, but for the most part, 330 here, 330 in September of 2023, a lot of these different snapshots have been there. Where we've seen the variance is, and this is where you see the seasonality of the resale market. Look at these different swings. So peak of the market in June, peak of the market in June here, peak of the market in May, June, July, and then the bottom of the market is January, 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 right? So our resale market follows basically the school market and the hot selling season, right? From March basically until the end of July, August, and then things start to slow down in terms of resale until the next calendar year, just kind of how it goes year over year. This is for the past 3, 4 years, so you can see. Now, looking at volume, let's take a look at the different property types. See what I mean? $2.3 billion of resale volume for single family homes for pre-owned versus 200 million for townhomes and almost 100 million. So, I mean, it's such a big portion of the market, but also look at the different swings. Now, why is that? When you take a look at single family home, why does it follow such a big variability? Why is there such a seasonality to it that townhomes and condos don't have? Well, they're different buyers, right? Someone who's buying a townhome or a condo is typically buying a product like that year round. They're not following the school year, whereas people who buy single family homes do because they follow. It's usually not always. There's plenty of people who don't have kids or who are single, etc., have different circumstances who are buying single family homes, but predominantly families buy single family homes. And most people, if they have kids, want their kids to be in school and they don't want to worry about moving during the school years. So they follow that March to July timeframe. That's why you see such a big upswing when you look at single family. So moving on, take a look at volume for the pre-owned homes. And Fulton this year, volume's up significantly year over year. Last year it was 519 and we're up to 589. That's $70 million more in volume this year. Now that volume is over a whole gamut, right? So if you have a whole bunch of, let's say, luxury properties that are selling in Buckhead and Alpharetta and Milton, well, they're included in this, right? We're not separating things. I will be bringing the luxury market stat video back as well. So we'll be able to dissect that. And if you're over the $1 million price point, you'll be able to get specifics on the market there coming up in August. But we've had pullbacks in most other areas except for places like Cherokee and Forsyth, a little bit of Paulding. But Cobb's had a pullback in volume, DeKalb's had a pullback in volume, and Gwinnett has had a pullback in volume. So let's take a look at where the attention is in the market. And when you look at showings right now, showings, this is year over year over year. So it's all June, dating back to 2020. And we had basically the lowest amount of showings in June of 2023. But we also had low inventory, 3,800 properties go under contract. And over the past couple of years, these showings year over year over year have trended upwards, right? But while over the past couple of years, inventory's trended up. This past year, this is pretty much the same year over year. 13,890 to 14,105 is approximately 215 more properties that have come to market. That's a very small percentage year over year, but we're starting to see a downward trend on pendings. So people want to see more houses. Buyers are pickier than they've been because you have more choices on the market. And if you go back a couple of years, people would look at one or two houses, and it seems like if they didn't make an offer right away, that house would disappear. Now buyers are becoming used to properties sitting on the market for some time. So they want to see more properties before making an offer. And when they're making an offer, unless you're in some of the hottest areas, these properties are not always getting multiple offers anymore. So you're seeing properties basically needing many more showings to go under contract. So we're going to dive into that because I've got these stats coming up. So if you take a look at it this way, showing activity is up significantly year over year in DeKalb, and it's up quite a bit in Cherokee as well, right? Take a look at Fulton, is roughly the same. You've got a little bit of a pullback. It's a marginal pullback in Cobb, but nonetheless, other than Henry that had a bigger pullback, showings are up across the board when it comes to single family homes. Now, look at this. So this is showings to pending. So across the metro in the core Atlanta counties, the average listing in a 30-day period is getting 3 showings. That's not a lot. That's a very, very small number. But when you look at this, they need 10.3 showings on average to attract a buyer and go under contract, which means you have to be on the market for 4.3 months, 4.2 months, something like that, for a little bit over, what is that, 13, 14 weeks of being on the market to attract a buyer, to have enough time to have enough showings to find that buyer that's going to make you an offer on average across the metro. So that's interesting. And look at how that's spiking up. So it goes to show when you look at how many showings we have in June this year compared to last year, it's no wonder that showings to pending is also going up too, right? And the amount of showings per listing is going down. So yeah, if you're a seller and you're watching this, understand that if you're not getting 3 showings a month and you're under that, I'm going to break this down by area, but if you're less than what your area is, then it's because it's either a price or a condition or a marketing issue. We talked about a little bit earlier in the video. So take a look at it here. So this is going to be striking when you look at it from this perspective. So place like Cobb is only, the average listing is averaging 2.3 showings in a 30-day window. Of course, depends on the area. If you're in East Cobb and Walton, for example, you're going to be a lot higher. But if you're in South Cobb and like Pebblebrook or South Cobb High School, it's going to be a lot lower. So Cobb as a whole, you're 2.3. Fayette is 3.8, DeKalb 4.2, Clayton 4.1. So some of those are higher. But look at how strikingly different by county this is when we look at how many they need to go pending. Look at that. Love the way that I built this chart. That is crazy, right? So Cobb was at 2.3. To go under contract, you need 5.8. That's because Cobb's moving faster. So you don't need as many showings in order to go under contract. If you're getting, 6 showings a month in Cobb, chances are you're going to go under contract in that first month. That's what that means. In DeKalb, though, we had 4.2? 4.2 showings per month, but you need 15.8 to go under contract. And then look at Rockdale. Rockdale's averaging 3.8 showings in a month, but in order to go under contract, 3.8, you need 18.5 showings. So you're in the market for 5 to 6 months if you're not getting a bunch of activity and you're averaging that 3.8 before you finally go under contract. So as a seller, the way that you use this is you understand if you're not getting those amount of showings, then again, price, condition, marketing, you've got to adjust something. If you're working with an agent who's optimizing your marketing and you're still not getting showings, then you got to look at the condition of the property. When you're looking at the pictures, what are people seeing? Is there something with the property that is turning people off? And then my mentor, who recently passed away, was an awesome woman, Sue Hilton, great, great lady. I was on her team my first year in real estate and she taught me so much. She used a much different word, but she used to say, Terrence, there's a but for every seat, right? And that means that it doesn't matter what the house is. If you price the house at the right price, it's going to sell. Someone's going to buy it at the right price. So condition related issues can be overcome with pricing, right? The problem right now is a lot of people want a certain price the market is not willing to pay. But you can use data like this to understand what's happening in your county. And if you want more specific data, then you need to ask your realtor to give that to you. if you don't have one and you're thinking of doing something and you want to do a discovery call, you can do that. Feel free to reach out. But nonetheless, but you can see as a seller how you can use this information. I mean, as a buyer as well, right? You're looking at where the market is stalling a little bit. And when you look at these metrics and you find a listing that has more days on market, and if those showings per listing here are low, and you want to live in that area, chances are you can make a little bit more of an aggressive offer. If you're a seller, when you have an offer that comes in, you're going to want to find a way to make that work because it might be a while before you get the next one. So lean on your agent to help you get the stats that you need. If you're working with a great agent, they should understand the market and they should be able to give you guidance on this. So next, let's take a look at showings for townhouses. So here we're at 1.6. The townhouse market right now is slow, right? 1.6 showings across the metro in a 30-day window is a very small amount of showings, but you need 4.9 in order to attract that buyer to go under contract. Now, for condos, it's still, a ratio of 4 to 1. Your typical condo is getting one showing in a 30-day window, and they need 4.3 to find the buyer and go under contract. Now, moving on, let's look at some price cuts. So, almost half of all the listings in every county for pre-owned houses right now have had one or more price cut, and the price cuts basically have averaged, 5.4% in Greater Atlanta. And by the counties, you're getting bigger discounts in Clayton at 6.4, 6.6, DeKalb 6.4. Take a look at Fulton. Your typical listing there, when they have a price cut, has had a price cut of 6.8%. But in order to go under contract, this is what the active listings have had. And in order to go under contract, well, let's go back to Atlanta as a whole. 5.4 is the average cut, but 7.5 is what the properties that did go under contract needed in order to go under contract if they needed a price reduction. I know that's a lot. There's some properties that price well out of the gate and they attract a buyer and they go under contract without ever needing a price cut. But if you need a price cut in the greater Atlanta area, you're looking at a price cut of 7.5% on average, right? Take a look at Forsyth, 7.7. That's huge. And the typical listing in Forsyth has only cut by 4.6. So they need another 3% and change in order to attract that buyer and to go under contract. So that's not to say that this is a blanket statement for all of the properties. It obviously depends on circumstances. We're looking at averages across many different properties. Now, take a look here. This is very eye-opening as well. For pre-owned houses in Fulton County, of the properties that have had price cuts, the typical listing has dropped by $53,000 in Fulton County. Take a look at Cobb, it's $36,000. So, when you're looking at this and you're a seller and you're like, I'm going to drop by like 2 or 3,000 in the next week or in 2 weeks or next month, I'm going to drop by another small amount like that. That's not going to get the job done. You're not going to move the needle to get people off the fence, especially when you look at it from this perspective, right? If you take a look at it from this perspective, 67,000 is the typical price reduction that was needed in Forsyth County to go under contract, but 41,000 is what sellers that were still on the market had cut to. So big drop there. So when you take a look at this, market as a whole is trending towards balance. We have a couple of different opportunities. If you want these slides, they're in the description. Check that first comment. And if you're going to watch more videos today, YouTube definitely thinks you should watch this one next. Thank you so much for watching. Hope to see you on the next one.